What's up, traders? Today we're going to be taking a look at the XLE. I want to focus in on energy because rarely in history have we seen such a division. A lot of people are extremely bullish on energy prices and energy costs going forward, and a lot of people are extremely bearish as well. And it makes sense because it's easy to build a narrative for either case. You could either be extremely bullish on energy prices, saying that they're going to get more expensive going into the future as we're going to need more and more energy to meet the needs of the human population. And then there's also the technology and deflationary aspect that going into the future, we're going to get all of this free renewable energy, and we're not going to need all of these old hydrocarbons and various other ways. And honestly, I could go either way on the argument. I think that going forward, a lot of things are going to have big moves to the upside, big moves to the downside, but overall, it's just going to be a lot of like sideways and chop. So let's rule out the fundamentals here and just kind of take a look at the actual charts. Before we get started, I do want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have the XLE, which is the Spider Select Sector Energy Fund. And we can see it bottomed out here at about $23 with the Rona dump. And then we had a push up here recently to about $95. So quite the range, but now we see that we were above the 200 exponential and simple, and they were both sloped to the upside for some time. And now here we have actually flipped them bearish. We pop back up again, put in another lower high, and they are flipping bearish again. So we're very close to losing the trend that has been in effect since the bottom from the Rona. So what we want to do is go ahead and take our Fibonacci tool and start here at the bottom, and we're just going to run it from the bottom up to the top here. And we'll just switch it over to blue. And now what we're going to focus on is on the way up, did it feel like this was respecting those key Fibonacci levels? Well, here's our 0, and we don't know where these levels are going to be until we reach the top right here. So we get a big push up here, and it stops exactly at the 0.5. So obviously a very clear touch there. And then it comes all the way back down, and we come back down exactly to the 886. So again, a very, very clear pivot point from the peak to the trough right here. And then we continue to the upside. We see lots of support. We see lots of support. We see some resistance all throughout the range on the way up. And then we see support here at the 236 again. And now we're just kind of like pinned in this range between the top and that 236. And now we're just kind of losing the moving averages as we consolidate sideways. So if we just draw in a little ascending support line right here, we can see it basically just connects all of our lows right there. And we'll just switch that over to green. And that's essentially what we're hanging on to right now. So that recent move down, we got to bounce off of that same support line right around that level. And now we're trying to push back up. We've broken down below the 200s multiple times. Here we actually flip them both red, which is not good and technically the beginning of a bear market. We usually get one more pushback up here and attempt to save the trend. In this case, it resulted in a lower high. And it also corresponded with the fundamental event of OPEC cutting production, which caused a quick boost in the actual oil prices and the whole bullish narrative going forward. I obviously don't believe that narrative. OPEC is not a government or somebody that has some specific agenda to clean up the world or do good or anything like that. OPEC is a group of producers that want to make money, and they're focused on profits. So if OPEC is cutting oil production, in my opinion, it's because the demand is not there relative to the current production. So you could argue that it's bullish because suddenly there's going to be less production. But my opinion is rather than looking at causation and correlation and just jumbling them all together, we should actually pay attention. Because in my opinion, the reason OPEC cuts oil production is because they see demand falling. They're not going to cut production to keep prices high if the demand is there, because their goal is to sell as much oil at as higher prices as possible. So in my opinion, the whole narrative is wrong and it's going to fold. Now, of course, we could be wrong. Everything is about probabilities, not certainties. But that being said, we have a clear ascending support right here. We definitely need to hold on to that level. If we don't hold that level, we're likely to come down here and get a touch of the 236. You could argue also that if we already had peaked out right here and this higher high right here was actually like kind of a short squeeze and we're going to go lower. Either way, though, we already touched the 236 if we would have topped out right here, and we're going to have to come back down to 236 eventually if we're going lower. So 67 seems like the obvious target for that. So the next thing we're going to do is zoom out here on the weekly and just take a look at what's going on there as well. So one of the few assets that has not made a higher high is our energy prices, and in this case, the XLE as well. So we're just going to draw a fib all the way from the peak in 2014 down to our trough here with that Rona dump. And that's going to give us our Fibonacci in orange right here. And we'll see that we basically topped out almost at the 100% retracement. So we were very close to putting in a new all-time high, but we were unable to do it with the momentum we had at the time. So once again, we're just going to kind of glance at the orange fib right here and see, did it act as specific swing levels? Did we see those exact reversal points on it? No, not really. It's still useful. It's worth having, but we're not seeing that clarity that we did off of the blue Fibonacci we put in there. So if we just take our drawing tools back off here, we'll see, obviously, for now, I'm still very bullish on oil long term, as long as we stay in this bull trend. And I call it a bull trend because here the 200 exponential crossed over the 200 simple coming out of that Rona dump February 2022. At that point in time, both our 200s were slope blue and both of them are powerfully angled to the upside. And that is technically a bull market. And typically we'll see continuation, likely to new higher highs. But in the meantime, we do see some warning signs. So the 8 and 21 bear cross took place right here. We attempt to save it and then it fails. And now we broke down below it again. So if we do not get above that $84 mark in the next few days or weeks, this trend is likely to pick up momentum to the downside, and that is probably going to take us down to that 67.56 level, the 200 exponential, or potentially the 200 simple at 59.34. And we'll see if we turn our drawing tools back on. The blue 236 lines up perfectly with the 200 exponential. So it seems very likely at this time, based on that confluence and everything, that we're going to come back down to that area in the near future, and we're going to retest those levels. Now, it is possible that we consolidate here and break to the upside, and in which case we can completely switch and say we don't need a deeper retrace. The bull trend is strong and the buying demand is there. The profitability of the oil producers and companies, etc., in the XLE are doing well. Therefore, bull market's on, don't need a deeper retrace. I think that is very unlikely right now, though. So we see where the dangers lie on the weekly. We see where the potential support targets would be. Let's switch over to the monthly as well. So once again, we're going to turn off the drawing tools on the monthly, and we're going to see that oil has basically been in this range from the lows to the highs for decades upon decades. Some very strong support was around that 35 level from the 2000 peak. And then at that point in time, we've basically just consolidated in this sideways range right here. Here we took out the lows. Here we took out the highs slightly. Who knows what's going to happen from here? As far as I'm concerned, though, when we look at this monthly, the 200 exponential is powerfully angled to the upside. It is still below the 200 simple, though. 200 simple is still powerfully angled to the upside. Both have their blue slopes accordingly. But we see the 8 and 21 bull cross that took place in May of 2021 that got us bullish on the monthly chart. When we back tested support and then continued to the upside, we're now threatening that trend. Here, when we saw that retest, we came down to 200 simple. We never really closed below the 8 on the monthly. Here now we're testing the 21 on the monthly, and we can see clearly this is weakening. So if we do close a lower low on this monthly, which we still have the majority of the month to see what happens, we're likely going to come down and start retesting those support targets. And because we already tested the 200 simple right here, if we do come back down to that level again, it's probably going to be to retest the 200 exponential, which is around 59.54. And it seems like a real deep retrace right now. But when we look at the macro and we really pay attention to what's going on, somewhere around that level is the 382 in blue or the 618 in orange. So we have a pretty key level that we're paying attention to right here around the 70s and a retest of those recent lows. And then potentially a deeper retrace would take us back down to the 200 moving averages and some other key Fibonacci's. But the truth of the matter is, whether we just go straight higher from here or whether we come back down, have a retrace, and then eventually potentially go higher, I'm actually bullish on energy macro regardless. There's a strong case to be made for the human race just needing more energy going forward into the future. Also, people tend to be really bad at timing. So the idea that suddenly we're going to have all this renewable energy and we're not going to need all these hydrocarbons and it's not going to affect anyone's quality of living, which obviously is directly related to the amount of energy they have available, the price of that energy, and how much they consume. I just don't think that's a realistic assumption. I think more likely than not, people are overestimating how quickly we're going to move into this clean, renewable, green energy future and underestimating the amount of hydrocarbons and existing energy sources that we're going to need going forth. So while I am bullish on alternative energy like nuclear and some of the renewables as well, I think the timing is off. So we have some clear targets to the downside if we do continue to retrace some key horizontal and ascending supports as well as moving averages. Let's just pop up our momentum indicators. and take a look here. On the monthly, we have XLE, and we see we now have 4 red months of histograms in a row. We have the hard sell signal and left the bullish control zone, and the Stochs are powerfully out to the downside, and the knife is below both the stochastics. So as far as I'm concerned right now, we have a lot of steps of support on the way down, but momentum is going to continue taking us lower. So there's definitely going to be some opportunity. The real question isn't if we want to buy XLE, it's just a matter of when and at what price. So while long term, I definitely bet on human innovation and our ability to bring renewables to the human race at an affordable cost, I think the timing is off on this one. So as far as I'm concerned, the bet is still more expensive energy going forward. And the poor decisions that governments have made over the last few years, the threats they've made towards the industry and lack of capital investment just tells me that more likely than not, the energy trade is going to be more bullish and it's going to last longer than most people expect. So yeah, just wanted to take a look at energy there. I think a lot of people were on the wrong side of the trade when this thing was skyrocketing. And now I think they're going to be on the wrong side of the trade when we see those deeper retraces. And there's definitely some fundamental situations that could play in, like a recession or perhaps sustained inflation. But I'm not sure that that's necessarily going to affect where the macro goes, more just the narrative when we head there. So yeah, that was fun. Just want to talk a little bit about energy. Take a look at XLE. We'll go ahead and wrap it up there. Please remember, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So yeah, that's it. Crypto Trend Trader, and I'll catch you on the flip side.